Okay, good day, everybody. I'm J Pinkert. I'm with Cyber Trading University. I'm the Forex Live Room moderator. That's where you could find me. How's everyone doing? Some new names in here for me. I've been showing my stuff on FX Street for Boyke. Your name looks familiar to me. Okay, let's get to work. What do you say? All right, we got the Greek elections out of the way. Everyone see the S&P chart here? Please give me a Y if you can see it showing up okay. Okay. So basically last night we had one of those buy the rumors, sell the fact trades. The S&Ps, with them being unchanged to just down a shade, are actually holding up much better compared to how strong the dollar is, especially against the euro. So I'm sure everyone in here has traded stocks before. So this is a classic buy the rumors, sell the fact scenario that the market, which is a discounting mechanism, had begun to price in this outcome of the Greek elections. Hi, Keller. And last night, S&Ps were up about 6 handles. By the time we opened, we were about 6 handles lower. Holding up, like I said, much better. We've had some recovery in the crude oil market. It's come back about $1. We have those ongoing talks. We have negotiations with Iran this week. Let's take a look at the crude oil. Trying to diffuse the nuclear tensions there. Not sure I have a lot of confidence that there's going to be any major breakthroughs here, but as you can see, the oil's been under pressure, just like most risk assets have been, and it's trying to base out here, but you can't rule out some of the bearish targets are more towards the 76 level before we have a much more meaningful rally. That's going to have some implications on USD CAD, for example, which I correlate quite closely with what happens in the oil market. But really the key and what we're focused on here is the linchpin, and obviously the linchpin is the dollar. This was a classic sell the rumor, buy the fact scenario in the dollar. Let's take a look at this. Very big reversal. Everyone see the dollar index chart? From last night, we had a gap lower opening in the dollar, which equated to the gap higher openings that we had in Euro, Aussie, and all the risk pairs. If you understand what I'm talking about, give me a Y. If you need me to clarify something, please feel free to ask me. There's no such thing as a silly question, only silly answers. Is it a deal? So I have to believe that this was corrective. And again, the dollar was selling off into these elections, got the outcome they were looking for. No one was looking for the bailout party to have a majority. So they got the outcome, and now we're reversing. People that follow some of my webinars here at FX Street, why do you think I believe that there's potential for a new high to take out these highs in the dollar index based upon the RSI, which I've renamed Real Simple Implicator? Anyone have an idea? Have some regulars in here? If not, I'll give you 5 seconds to give me an answer. 5, 4, 3, 2, 1. Okay, it's based upon the RSI. When the dollar was making a new high, RSI confirmed the high. It confirmed the high. That's right, Len. This is a confirmed high, and markets rarely peak when momentum confirms price action. peaks generally happen, this is what would be called a momentum peak, not necessarily a price high. So we could rally to new highs. Next time, the RSI most likely will not confirm, and it'll be under this reading. But the fact that we did confirm up here had me thinking that this was corrective and counter trend, and that we had a chance to head up at least one more time. And I'm going on this basis, and you could really just risk the lows of last night, the highs of last night in euro, looking for new highs in the dollar index and potential new lows in the euro. That's my take from what I see here. The RSI is called the Relative Strength Index. I've renamed it the Real Simple Implicator because of what RSI implies. And when the RSI confirms a high, the implication is there's another one to come that may or may not be confirmed. Give me a Y if you guys understand that concept of confirmed highs leading to new highs. Confirmed lows, high probability of new lows coming. It's a pearl. You may want to write it down. Sure. As we go through this, there'll be some examples. Well, there's a three-drive formation that I teach, but you don't have to have three for it to be completed. But that is a formation that I pay attention to. Usually, because you have three drives, you have two non-confirmations, which builds the probability of a turning point. Does that help, Len? Okay. So let's get over to our pairs now. Starting off with USD CAD. USD CAD, sell the rumor, buy the fact. Here's an example of us not confirming this low, staying above 30. So there was some divergence here on the 1 hour. Very good divergence. Here's a potential three-drive formation, Len, right here. There's your 1. This was a confirmed low. Here's 2. This was a higher reading, a non-confirmation or divergence. And here's 3, even a higher reading than the previous one. And now we're coming out of this formation. And if the dollar is going to make a run at new highs, my best guess, being a professional guesser, would be that there's potential for Canada to retest the highs up around the 104 level. Okay? And the other reason why is if you go to the hourly, what do I correlate the Canadian dollar with? What does Canada tightly correlate with besides oil? What's in Canada's immediate family? Its immediate family is the Aussie, its brother, and Kiwi, New Zealand dollar, its sister. To some extent. Actually, I think copper is has a little. If you look at the last move, copper correlates a little closer because of its relationship to commodity expansion through China demand. But gold is part of it, yes. Commodity family, correct. Natural resource economies, that's right, they're a family. And the Aussie is the brother. Although paired differently, they're still related. Whereas if you look at USD CAD and USD Swiss, they're both going up together. But the Swiss really isn't a natural resource economy. Of course, it relates to gold even closer in my view. I call these two cousins. They're not brother and sister, they're cousins. But what I wanted to demonstrate was with Aussie last week on the hourly, Aussie kept making successive new high after new high after new high after new high, and it finally took this last push up for Canada, which was for Canada, which while Aussie was making new highs after new high, it took all of that strength in Aussie and Sunday night's action to finally take out a previous low in USD CAD. So what's the market message in that? And this is based upon a correlation. So they usually, at times, trade in lockstep. But this time, Aussie same time frames, took out these highs by a lot and kept going and kept going. Whereas Canada, I don't know why I keep it in the pound, kept holding these lows. This low analogous to this high in Aussie, which way surpassed it in Aussie and couldn't take it. It took till Sunday night for Canada to finally take those lows out, and only by a few pips, not by 100 pips or better. So the market message I was getting is if Canada can hold up with a weak dollar and strong Aussie and Kiwi, what would happen if the environment changed and the dollar caught a bid and Aussie corrected? Here's your answer. A very nice turn. So it became the preferred long. Can I have a why if people understand that relative strength argument and the correlation between USD CAD and Aussie USD? Okay. Normally when Aussie was taking out this high, Canada should have been taking out this low, but instead it wasn't. It was holding this low. So what it's saying is, boy, this Canadian is tough. This Canadian is tough. This was during a period of dollar weakness. So it was demonstrating relative strength compared to what the Aussie was doing. Does that help you, Floyd? So those are market messages also that we teach by being able to identify correlations. You'll notice when relationships are giving you a message. Did that clarify it for you? Do you get that now? I bet you're going to start watching that relationship, aren't you? So that's my take on USD CAD. To me, it looks like we have a pretty good turn. You look at the dailies, there's potential for us to move back up to new highs. This high was confirmed, so perhaps the next high will not be confirmed or a retest of it. I really don't do much with that pair. Kiwi? Yeah, Kiwi was a strength, was even stronger than Aussie USD. So the argument was even stronger if you compared it to the New Zealand dollar. Okay? Moving over to pound dollar. Again, Buy the rumor. Plus, going into the weekend, people felt safer being in pounds than being in euros. Perhaps we still have 158 left in this. I'm not saying that you just jump in every currency because of what the dollar did today. But to me, I still view this as being in a downtrend. This was a pretty dramatic decline from 163, so we're getting to some fib retracement levels. I think there's going to be at least a full-blown retest in the pound at the low. That's my take on the pound. Any questions on the pound? The preferred short is euro over pound, okay? And the reason is the trend in euro pound. When euro pound is trending down, it favors shorts in what pair against the dollar? That's right. And what's your preferred long, Fuji Kimbo? While this is trend, say you want to trade a reaction, what should you be buying? Look, that's right. Very good. So to me, when I look at EG on a daily, it may not make a new low, and that would be pretty positive for the euro. If the euro made a new low, or it may lead it down. And to me, EG looks pretty negative, and euro on the daily after today looks pretty negative as well. In fact, EG looks more negative, closer to the lows, already began to sell off on Friday. So until you get a turn in this pair, stay bearish euro and trade counter trend with the pound. Any others understand this besides Fuji Kimbo? So you could either trade EG or you could use EG for telling you what side of pound dollar euro USD you should be trading. Okay, good, Boyke. So again, if we're looking for a new high in the dollar index to take out that high, we could see one more push down in euro, and perhaps this time we end up with a momentum divergence because this low in euro was confirmed on the daily. There was no divergence before we had this bear market rally. At new lows, I would say lighten up on your bearishness. Everyone see that? That at this low, momentum confirmed it, which means via the RSI, real simple implication is that another low could follow that may or may not confirm. My best guess is that should we get this new low in euro, there'll be some divergence, and that might be a better buy. I know everyone's looking for 115 in parity and so forth, but perhaps we just get one more washout so that everyone who didn't have a chance to cover their shorts last week has that opportunity. And we know there are huge short positions in euro, and that's part of what this was short covering into the election, buy the rumor, and they sold the fact here. Clear on my euro take here? Any questions on euro? Okay, what's the other major event that we have happening this week now that the Greek elections are out of the way? Yeah. Well, it's really not a historic low. It's been lower. Okay? See that guy? And really, if you look at the Fed, you look at the euro, when it first started trading, it was about an 85-cent instrument. So we're not close to historic lows. And yes, I think there's a chance of another push to the downside, and it may turn out to be a decent buying opportunity. You can't rule out a higher low as well. Okay, so the Fed is the next major event. Why do I think, and I have a small position here, okay, yeah, that may be it. We could put in a higher low. That's very possible. You have a good eye. Why should the Fed matter to me if I'm trading USD yen? We have some sharp traders in here. Some FX Street does a great job in educating their membership. It's great to see these questions being answered. Why should I care about the FOMC meeting on Tuesday? Anyone want to take a shot? Why would it matter to my US dollar yen position? What was the last thing they did? It wasn't QE, was it? It was Operation Twist. About keeping long rates. So US dollar yen has an inverse relationship to the move in treasuries. When the bonds are going up, which they did after the NFP, right? Bonds went up. The NFP was the historic low in bonds. But then you go to yen, and this is the NFP report was the second higher low in yen. So normally if you look at a bond chart, US dollar yen should be making new lows if treasuries are making new highs. Do you understand that? Hold on. Floyd, you get that? Okay. So the relationship here is telling me that there's some inherent strength in the yen. That it's not down here with bonds making new all-time highs, TLT making new all-time highs up towards 130. The yen should be back here. And we continue to base and put in higher lows. Could it break and retest this low placed on the NFP? Of course. But the market message to me is that there may be a bond correction coming. So if the yen can act okay with bonds acting great, what would happen to US dollar yen if bonds began to fall and rates began to rise? So this is a position trade for me. It's a huge triangle. I think it could be a campaign trade through the summer. I know it's a long way from here, but we start taking out the highs from this spring. You can make a case for 88 to 92. So I would pay attention to what happens on Tuesday, and let me just show you a chart so you could visualize this. Okay, so here's the TLT, which is an ETF of 20-year treasuries. It's the Barclays. It used to be the Lehman bond index, but we know what happened to Lehman, right? So we've made much higher highs in TLT while the yen is putting in higher lows. So if you look at this flat area here at 124, I think eventually it's going to give way, which is going to project down here to about 118. The only question is how do the bonds respond after the Fed announcement on Tuesday? Is there one more high left in them? If there is, it won't confirm. And if it's a lower high, it's going to have the look of a descending triangle. So I'm favoring buying US dollar yen on weakness. I measure them by, it's very simple. I mean, there are some people that have meters, Boyke, but just from screen time and noticing whether or not something that's correlated is making a new high or new low, and what it's correlated to is not. It's really that simple. It's an observation. But I do believe there is software out there, meters, that will give you that, not based on these correlations that I teach, though. So does that help? I mean, all I have to do is look at a chart of the bonds, and I know bonds are making new highs, and then I come back to normally the yen is making new lows. We should have taken out these lows. I can make a case for, initially I'm looking for a retrace of this. Initially I'm looking for a retrace of this decline, but eventually I'm looking for a breakout. 88 comes to mind to 92. Are some longer term, intermediate term targets there. Is this new? If this is new to you, the correlation between US dollar yen and US treasuries, give me a Y. If it's not new, but it's something that $450 pips to where, up here? Yeah. And if you're the type of trader that's waiting for confirmation, closes back over 80 are going to look pretty good. You don't have to buy the bottom to be there for the move. Okay, but we start closing, there's a lot of moving averages converging, just a shade under the 80 level. Okay. We already went over euro pound. At new lows, the most likely would be divergence. It looks pretty negative to me. Aussie's diverging pretty good on the 1 hour here. And this is the first time Aussie has not made, what happens when they do? You know, I reassess, possibly get stopped out. I'm looking for them not to always be in line to take advantage of them. But there are times, you're right, Boyke, where they break down. But the beginning of this dollar rally was on a positive ISM report. And so for a day or so, I felt out of step because the dollar rallied sharply, but so did the S&P. But if you notice, that correlation sure came back together in a fairly big way, didn't it? And that's why I think the Euro-Swiss peg won't hold, because that correlation will come back in line too. But just like anything and these correlations are not triggers, they just give you an idea and a bias. They don't break it down to an entry and your risk and your objective. But they give you an idea of what might be your preferred longs or shorts. And it's kind of, I use the American Idol analogy. You could be a great singer, and if you choose the wrong song, your performance will not be good. In what we do, our song choice equals trade selection. So if we could buy what's showing relative strength and we're early, it will be more forgiving than if we buy something that's weak and we're early. Vice versa on shorts. So trade selection's everything. Agreed? So I use correlations to help me diagnose trade selection. Not necessarily when to get in, when to get out. Those are other tools. Capiche? Okay, I have a couple minutes for questions. We're starting an excellent course on June 21st. If you have an interest in checking it out. There you go. What's your most valuable currency? Max, Masood, Ray, Terry, what's your most valuable currency? Keller's got it. Trades come and go, time is gone forever. I don't quote prices. We have educational advisors for that. In fact, if you're interested, tell them that I sent you from an FX webinar, and tell them I requested that they get an FX Street discount. Okay? Tell them Dale Pinkert sent you. So I appreciate you guys spending your most valuable currency with me. Thank you for your attention. I hope I opened your eyes to a couple of new things, that you have a couple of tools you could put in your tool chest, maybe a few ideas that you could chew on, maybe take advantage of in the coming days. Thank you, Vicki. Thank you, Adinda, for moderating and recording this. I appreciate the opportunity to share my work with Mauricio's here too, to share my work with a different audience. Solvi, you're very welcome. I'll see you guys later this week, Thursday, regular time. I'm still going to be there. So good trading to all, and enjoy, and I'll see you soon. Thank you.